Are you tired of endlessly switching strategies, looking for the one that will actually work for you? All of the strategies you choose promise you a lot, but when you start actually following them, the reality comes out that all of them are filled with subjectivity. There are no clear rules to follow, and you always feel lost and frustrated while using them. Let me tell you something, if you have failed with trading so far, this is not your fault. You can't simply become a profitable trader by copying a strategy. That is not mechanical, that is not rule-based. What if I told you that trading can become effortless when you are not only second-guessing your trades anymore, but also gain a true confidence while executing your trades? Most importantly, all of that can help you to become a consistently profitable trader, scaling your trading to 6 figures while spending just a couple of minutes a day. Sounds too good to be true, right? But this is exactly what we are going to cover today with you. You will learn to trade 4 simple, rule-based patterns that will help you to adapt to the markets in the real time and trade all the market conditions. Once you master them, everything will click for you. Hey folks, welcome back to OP Investing. My name is Islam. This is the 3rd episode of 4-part mini-series where I will take you through the exact blueprint that will help you to master a mechanical edge or the markets to scale your trading to 6 or even 7 figures in the next 30 days without guessing your trades or being glued to the charts. If you haven't checked the first 2 videos, I would highly suggest you to watch them first to get a full picture of what we are talking about here. Without wasting more time, let's get started. Now let me share a story with you. When I first switched from trading with indicators, it was the boom of the smart money concepts, and it made the sense to me at that time. But as I dived deeper, a couple of problems came out. I knew where the price would go, but I never knew when. Most of the times I missed the price approaching to my key levels because I was either sleeping, eating, studying, or I was busy with something else, not checking the charts. Did you have the similar situation when you can spot the pattern only after it happened? That's literally because you were not in front of the charts while it was happening. I felt frustrated because I missed the trades, and after missing the trade that I was waiting for days, I was furious. I was like, damn, I had to find the trades to trade them. The FOMO was through the roof, leading to the violations of my trading rules and more losses. Can you imagine this? It couldn't go on like this. I needed to tweak the strategy so I would know exactly when to trade and when not to trade. I need a clear rule for each market conditions because relying on one entry method would not work in different market conditions. Like trend following will not work during the range, and strategy that was created to trade the range will not work during the trend. I spent months as forward testing and back testing, years of data looking for the patterns in the price action around the London and the New York opening times. At first, it felt like there was nothing in common, but over time, things started to become more and more clear. Price followed one of the 3 distinct patterns. It would either break out and retest and continue in the direction of the Asian range, or retest the key level and then reverse in the opposite direction, or make the liquidity grab around the key levels and reverse. Does it make sense so far? So folks, probably you're already using these models but using them in the wrong way. Fortunately for you, we've got the solution for that. Based on these 3 core entry models, I came up with 4 patterns. 4 patterns that repeat themselves over and over again during the key trading sessions. These patterns are traded around the origin point that we mark up during the Tokyo session. To mark up the origin point, you just need to mark up the first 4 hours maximum and the minimum point during the Tokyo session. All of our trades are traded on the 15-minute time frame. Let's get started. OP investing method number 1. This method focuses on trading the breakout and continuation from our origin point. Just imagine being always ready to catch the trend reversals or the early trends after the rangy days. With this method, we find the strong breakout from our origin point and enter on the retest of the key levels inside of the origin point. And as you remember, the origin point is the first 4 hours of the Tokyo sessions where we mark up the high and and the low of the price action. Whatever happened during those 4 hours, we mark up the high and the low, and this is our origin point. OP method number 2. With this method, you are able to identify the hidden intraday key levels. This method focuses on trading the reversal from those key levels. Just look at the examples. The price was trending the previous day and made the retracement the next day into the previous day candle. This is where we caught the reversal from the key level. Sometimes we can even trade the price reversals during the rangy market conditions, as you can see in this example. OP method number 3. With this method, you focus on catching the price reversal around the borders of our origin point. These levels hold a significant amount of liquidity beyond them. This method is crucial when price is entering an indecisive position. OP method number 4. The last pattern focuses on trading the manipulation. We trade the liquidity grabs around the key daily levels. Most of the times, the previous day high and the low act as the reversal points. Imagine being able to catch all the moves during the ranging days, spot the early trend reversals. This is exactly what this method will do for you. By combining all 4 methods, we can cover all possible market conditions and all possible entry models. That's really awesome, right? Let's quickly backtest the EU together with these concepts that you have learned right now. Okay folks, this is a EURUSD on the 15-minute time frame, and I just want to cover a couple of examples with you over here just to show you how does the OP investing methods work in the real life. This action happens on the 15-minute time frame. All the trades are taken on the 15-minute time frame. So let's start with this day. As you can see over here, the previous day candle was bearish, and over here we do have our Asian range. This is our high, this is our low, and over here you can see that the price is breaking to the downside, and this vertical gray stripes actually represents, this one represents the first 4 hours of the Tokyo session, this gray stripe. This green stripes represents the first 2 hours of the London, and this one represents the first 2 hours of the New York session. And all of our trades actually happened, like all of our entries actually happened during the first 2 hours of the either London or the New York session. Over here we do have the breakout to the downside, and as you can see over here, the price is retracing to the upside in to retest our Asian range exactly during the London session. And over here we can have our entry at the 60%, place our stop loss above 80%, and bum, 8-hour trade. But most of the times we just aim for 5-hour, because with our methods, with our strategy, you will be aiming for 5-hour, which is most of the times is guaranteed. So let's move to the next day. Over here you can see our Asian range here, and this is the low of our Asian range. And as you can see over here, the previous day candle is kind of like indecisive. We are entering into more kind of like range bound market conditions. And over here, the price is breaking to the upside. It is going up. And let's say we could have looked for OP method number 2 over here. This would have been some sort of like the break even or even a lost trade. And later on during the New York sessions, exactly, the price is sweeping this high over here and reversing to the downside. If you go to a low time frame, you will see the market structure shift where you can enter the OP method number 4. Actually, over here you can see that this is our low, and over here with this candle the price is breaking below this low, and this wick over here is retesting and giving us entry on the lower time frame. So this is OP method number 4 trade the next day, and this has happened exactly during the New York session. So let's move to the next day. The price is breaking to the upside but never coming back to retest during the London session during the first 2 hours, but later on between the London and New York, it's coming down and retesting our Asian range. But this happens like very rarely, 2-3 times out of 10, when the price comes and gives us entry during the no trading time. But over here you can see the prices gave us entry at the 80% and went to the upside. You might ask yourself a question like why we are entering at the 80%. Actually, this is a little secret for you, but I will just with you here. Sometimes we enter at the 60%, sometimes at the 80%, and the answer here is that we enter at both levels. We place our trades at the 60%, at the 70%, at the 80%. So we are basically breaking down our trades into 3. So if you even lose your trade with 60%, you will at least win the one with 80%. That's why I don't get surprised when I'm using like the different zones for entry. Okay, the next one over here, the previous day candle is bullish. Over here you can see our Asian range. This is our AR. The price is breaking to the downside over here, and we are having the beautiful retest during the during the London session, and it is retesting exactly the break block. With OP method number 1, we are basically entering into with 2 levels. The first one is with FIB levels, the second one with the break blocks. We do have more kind of like rules how to enter with each one, when to look for FIB levels, when to look for break blocks, but I will not be going too much in details in this video, guys. So basically the price is giving us OP method number 1 to the downside over here, and later on it is even giving us the OP method number 4 trade, sweeping the previous day low right over here and reversing to the upside. Again, all the entries are on the low time frame, sort of like the price is sweeping down and creating the new order flow. And by the way, we sometimes enter our trades with the order flow of the markets. The next day, Asian range. You can see the Asian range over here. We are having the breakout to the downside because there are some market conditions that we don't trade, and this is one of them. When we do have like a huge candles at the previous day candle, we tend to avoid such days. We will be just going to the next day. Over here you can see this is our Asian range, this is our Asian high, this is our Asian low, and you can see that the price is breaking to the downside. The previous day candle low is pretty far away. That's why we will be using that for OP method number 2 trade. And over here you can see that the price is just reversing from the previous day low and giving us some R. Yes, like it's giving us 2 and then reversing into the opposite direction. So it's basically the break even day. Moving to the next day, we can see that the previous day candle is bearish. This is our AR, which is at the bottom of the previous day candle. The price is breaking to the upside, and exactly during the first 2 hours of the London session, it is retesting these order block right over here. We do have some rules to identify that. And this is an order block that we usually look for, and it is exactly giving us a 5-hour trade exactly during the first 2 hours of the London session. So this is how we trade over here. And after that, we do have this pretty huge gap. Like most of the times, like when we do have such gaps, I avoid trading that day. So we just go to the next day. The next day is pretty much untradeable as well, because we do have our Asian range is too pretty big. Like as you can see over here, the Asian range is 60 pips, when in reality it usually 20-30 pips that we want to see to trade the markets. This is again like one of the secrets of OP investing methods, trading the OP investing methods. And again, the next day the Asian range it's pretty tight, like compared to the previous day candle. As you can see, it's just 15 pips. Over here the price is breaking to the upside, but it's never giving us. Over here we do have the sweep. The price is breaking to the upside. I would have expected the retest, but the price is not giving us entry and just going into the direction of the breakout to the upside. So it's basically no trading day, guys. The next day we do have our Asian range right over here. The price is breaking to the downside, and it's giving us entry exactly during the first 2 hours of the London session. Over here from the 80%, it's kind of like giving us about 3R. And yeah, it's kind of like just hitting some break even probably later on. So sometimes we do have such scenarios as well when the price is not giving us 5R, but we are safe. The price hit the break even and like that. Of course, we do have some losing days as well, guys. As you can see over here, the price is breaking to the upside, and exactly during the first 2 hours, it's coming back to retest. But in this case, it is taking us out on this low. It's kind of like the price action is pretty choppy over here, and yeah, that's not the best scenario to trade the markets overall. Okay, moving to the next day, over here we do have our Asian range. The price is breaking down to the downside during the London session, and it's kind of like coming back to retest to give us entry during our no trading time. As I said, like it happens rarely, but this is something that you can trade as well, because overall we do have our Asian range, we do have the breakout, we do have the retest and continuation in the direction of the breakout. The next day, Asian range is over here. The price is breaking to the upside. It is coming back to retest our Asian range during the no trading time after the New York session. But over here, we do have actually something interesting. As you can see, the previous day candle is bearish. Over here, Asian range is at the bottom of the previous day candle, and the price is actually giving us OP method number 2 trade from the previous day high. Oh, actually, this one is a previous day high candle. This one, right? It's actually giving us OP method number 2 trade from the previous day high in the direction of the previous day candle trend. And it's kind of like, it's again like didn't give us a 5-hour trade, actually kind of like it just missed that by a couple of pips. But overall, like if you held that over the next day, it gave that during the next day. But we don't do that. We don't usually do that. So it's probably like either the winning trade or the break-even trade based on how you have managed that trade. The next day, the price action is just getting more range-bound conditions. So at such cases, we tend to look for OP method number 4 trades. And over here, you can see a clear example of the OP method number 4 happening exactly during the first 2 hours of the London session. We're sweeping the previous day low, and then we're getting the entry on the low time frame and reversing to the upside. So let's move to the next day. Here's our Asian range over here, just drawing. I hope this is clear for you. The price is breaking to the upside, and it is giving us entry at the 60%. And this is giving us like a beautiful, let's see how much R, like it was 8R, but we usually aim for 5R trades, so it is again beautiful. The next day is again like it's a beautiful day. Here's our Asian high. The price is breaking to the upside, which is draw our feeble levels into like, let's say at the 80%, getting the best case scenario, because we place our trades at like 3 levels, 60, 70, 80, and it gave us like almost 10R trade, you know. It's a beautiful trade basically. So guys, this is it. I guess I have covered about a month's of worth of information over here. So I hope you've got some picture of how does the OP investing methods work in the real time. As you can see over here, the Asian range is the same for you, for me, and for anyone else. It's all rule based, it's all mechanical. You cannot trade the OP investing methods differently than us. We cannot trade the OP investing methods differently than you. All the levels are mechanical. The previous day candle high, low, they are the same for you, for me. Asian range is the same for you and me. And you cannot kind of like you cannot basically interpret the breakout differently than us. So it's just a simple breakout and retest. Of course, this is not all. You might be asking yourself, like, how can I combine the first method, second method, third method, fourth method? Which method should I be looking for? But of course, guys, we do have more rules on all of that. So make sure to watch all of the 4 series in our 4-part mini series that I have prepared for you to get the better picture and how I can help you just to learn these methods even better. And basically, guys, most importantly, you won't be spending much time. You just open your charts at the beginning of the London and the New York sessions. You just mark up your key levels and just wait for the price to give you the entry. It's gonna take you just a couple of minutes a day, so you won't be staring at charts all day long, so you can actually spend your time on what truly matters in life, on what you love to do with your close ones. So folks, transformation after using these methods were crazy. Finally, by trading the OP investing methods, I gained clarity in the markets. I had a solid trading plan and routine. Opening the charts and evaluating the current market conditions, I could determine which OP method was likely to work out today. I didn't have to spend my whole day in front of the charts to avoid missing trades. I had a specific time when most price movements occur. This was the time when I had a breakthrough, not only in my trading, but in my personal life as well. Can you imagine yourself doing that as well? I started feeling better. The level of uncertainty and stress in my life decreased. And the cool part is that it didn't just work for me. It works for all kinds of people all around the world. I have personally taught over 300 people who are successfully using these methods every single day. And now let me break a couple of questions that you might have in your head right now about the OP investing methods. If markets are unpredictable, how can a fixed strategy work? You don't need to be right all the time to be profitable. Trading is a probability game. The OP investing methods deliver an average 5-hour trades per every trade. Even with 20% win rate, you will still end up being profitable. But with 60% win rate, this strategy gives you a significant edge over the markets. Does this strategy work in all kind of market conditions? Yes. The OP investing methods is built on 3 core entry models designed to work in both trending and the ranging market conditions. It adapts to different conditions, keeping you in control. How this strategy is different from other pattern-based strategies? Okay, here's the answer. Most strategies lack clarity on when and where to apply patterns, making them subjective and inconsistent. The OP investing methods integrates a time-based element, ensuring trades are executed around the key origin point during the key sessions, eliminating the guesswork. So you know what to trade, how to trade it, and when to trade it. What if these patterns stop working? They won't. These patterns are based on fundamental market behaviors that have remained constant for decades. Backtest them yourself and you will see everything. I don't have enough experience, or I have tried and failed before. No problem. OP investing methods are beginner friendly. You only need to learn 4 simple patterns with a structured framework. By removing subjectivity and emotions, the strategy becomes easy to follow and replicate. A struggle with analysis paralysis and sticking to one strategy. This is one of the biggest problems of the traders. That's because vague rules create confusion. The OP investing methods provides a clear step-by-step plan with price plus time-based patterns around the key origin point. There is no room for doubt, just a structured, repeatable process. I don't have time to learn and trade the complex patterns. Listen, one of my first students, Luke, had a full-time job in UK Air Forces. Yet, he successfully traded the OP investing methods. Once you experience what a truly mechanical strategy is, you will never look back. Do I need to be glued to the charts all day long? And the answer is no. We trade on the 15-minute time frame, checking the charts once in every 30 to 60 minutes. While a bigger screen helps with analysis, you can manage trades from your phone without complex multi-time frame analysis. You might be thinking, your job is mentally exhausting and you can't focus on trading. This is not a problem. Decision fatigue is real. After making like 50 to 100 decisions, the brain defaults to take impulsive actions. But the OP investing methods eliminate this problem. With a mechanical rule-based strategy, decision-making becomes effortless, helping you trade with confidence. We literally eliminate any decision-making with OP investing methods because all of the rules are on paper. This is all good, guys, but it's just one side of the coin. To be a consistently profitable trader, you must have a solid edge over the markets that we have covered today here. But more importantly, you must have a solid mindset. When your psychology is on place, the rest will be that easy. But the problem is that people think that psychology is about meditating, journaling, and other stuff that doesn't actually solve the problem. In the next video, we're going to address the root causes why you have the psychological problems with trading. Make sure to watch the fourth and the last video that will make sure that you will master a mechanical edge over the markets and successfully implement them in the real life.